Welcome to 1 Minute Crypto. I'm your host, Kronos. Today, part 3 of our series on COVID-19. We want to get a handle on exactly how central banks like the Fed, Bank of Japan, and the ECB are handling this crisis, and whether or not their actions will cause price inflation. We're going to focus on the United States for this video, although things are looking pretty similarly around the globe. The Federal Reserve dropped their federal funds rate from around 2% to pretty much zero. This is the interest rate at which banks borrow and lend from one another on an overnight basis. When it drops, it makes it cheaper to borrow, which increases the money supply, which can increase price inflation. But another huge action that the Fed and other central banks are taking is called quantitative easing, or QE. This is basically creating money out of nothing and buying investments with it, typically government bonds. When this happens, the investors that were going to make those purchases have to put their money elsewhere, so this pushes new money into the economy. The Fed recently announced $700 billion of new QE, and they've positioned themselves for unlimited QE in the future. But at the same time, the US government is looking to send $1,200 each to most Americans to help combat the coming recession from COVID-19. The total cost of this move is over $1 trillion US. So where are they going to get the money? That's right, in the end, it comes from the Fed. The Treasury, which is part of the US government, issues bonds, which is how it borrows money. And the Fed buys those bonds with new money. Finally, the Treasury takes that money and sends it into the economy. So with all this new money flying around, it brings us to the big question: will we see massive inflation, price increases on everything from bread to Bitcoin? I actually think maybe not, at least not at first. To find out why, let's jump to the next episode. Post any questions or comments below the video. I'm Kronos. Thanks for watching.